we've created, hold on, let me get this running so I don't get cussed out for not recording them. We've created the journey here, and I'll post this in the chat real quick. Boom. All right, the journey. Everyone can still hear me, right? Can you hear me, Thor?
What up, man?
Can you hear me?
Yeah, I
All
can.
right, perfect. You guys, I got PTSD because of all the times that this has messed up. All right, so again, like I was saying, guys, the journey is a stress-free approach to trading. All right, and we recommend everybody. It's more to really learn how to get into a trade and not start freaking out, not becoming over emotional, not over trading. And the journey is something that's been put in place that you start with a small amount of money and you slowly grow the account through compounding. All right. We have the full description in here, but the main thing, guys, again, it's the emotion free approach to trading. We've written a full introduction, the main principles of the journey, and there's a couple cool things in here. The pretty much the synopsis is that you're looking trading spot, looking for 1% trades and getting out. If you constantly do that and compound your accounts, you'll notice after a few quite a few trades that you're going to sizably grow your account. And you can learn how to take a handful of trades and not be completely freaking out. You can set up a main entry and a main take profit and a stop loss, and then it's good to go. All right, so I definitely recommend everybody pop in here, read it. Even if you don't do it, just give it a gander, see if it's something you might like doing. We have a indicator that's in the channel too, and that indicator, all it is a VWAP, and then you have this little box right here, and that shows you what a 1% move would be. So literally you hop in the trade, whatever number this says up at the top, that's what you're hitting. All right, that's your take profit, and you're done. Nothing else. All right. Again, this was aimed towards spot. You do this with leverage, now you're risking a lot more than what you're supposed to be risking, and you're gonna just get into the same emotional trap. All right. There is a log in here as well. So here's the indicator, and we do also have a spreadsheet, and it kind of shows you, if you plug in the amount you start with, it shows you how you should be progressing that account. It's also live, so you're going to put in how much you made on a trade or put in the entry exit price. It tells you how much you made on the trade, and then it'll give you the new target. All right, so I recommend everybody take a look at this. But this is more so a entry level where we're going over very basic topics when we discuss when we talk about stuff in the journey. We're going to be going over some core principles, mainly supply and resistance, and our supply and demand, and support and resistance. All right, those are some great pillars, and there's going to be different ways of approaching support and resistance. All right, because it's not always a daily level, or it's not always a support and resistance line that you're driving across. Sometimes it might be a fib level that you've seen's been respected, or a high volume node, or something that shows that there's actually support or resistance in those levels. So we kind of dig deep in that. Thor's really good at drawing ranges, and the range high and the range low, support and resistance. All right, so breaking it down to the most basic principles, I think helps everybody. Even if you guys have been trading a long time, I definitely think that when you go over the basics and you realize that there's only a few tricks when it comes to trading, you can really break down and create a strategy that will definitely help your trading career as you guys progress. All right. We're not here for a short time. We're here for a long time. We want to be traders. We don't want to just come in the market and gamble. We want to actually build an account and, use this to feed ourselves and have some extra dough on the side. So, all right, Thor, floor's yours. I gave my journey spiel since we had 90 people in here.
Floor's been mine every night, dude.
Yeah. No, what do you mean?
What do you want me to talk about?
I want you to talk
How about
about,
this, man?
huh?
How about how about I ask everybody in chat if there's anything that they're struggling with, and don't say exo charts, don't say order flow. If you guys are in here right now and you guys say that, that's not what the journey is about. The journey is about the basic fundamentals. So I'll leave it to you guys tonight. Is there anything that you guys are struggling with? Premature evacuation. Yeah, me too, man. Me too. Taking profit. Please help.
Taking profit's a huge
White
thing.
Phoenix, can you help Senior? Market Cipher. All right. Market Cipher. Taking profits. Ali no potato. And throwing tomatoes. I'll give you guys a chance, man. Tonight the floor is yours. If there's anything you guys are having issues with that you want me to touch on, I'll gladly touch on. I
Yeah,
want to say last night we talked about a few things. Like we talked about having a plan and how you can go about having a plan just from like basic support and resistance levels. Was up 3.5K today, ended 1.5. Oof. Knowing when the range is in place. Okay, I right now I'm hearing a lot of like planning and yeah, I'm hearing a lot about planning. I struggle with position size, math prior to entry. Yeah, all right, we'll go over it, man. We'll go over like having a game plan. Like I'll go over it.
Phoenix brought up a good one, but I think that
What do
definitely
you
goes.
say? What do you say? What
What
about
about?
having a game
Yeah.
plan when to stop trying an idea? If price hits my zone and I get stopped out on an idea, should I try again? I don't know, man. That depends. Like, how much weight do you have into your idea? Because, quite frankly, that's almost like a trick question. I like running tight stops. And if I can run a tight stop and still be like within 1% of my entire capital, I might have a couple trades. And I'm looking, if I'm looking for like a key bottom, yeah, it is a trick question. Okay, yeah. If I'm looking for a key bottom, man, I might hit it once, twice, 3 times over. It just depends, man. It depends.
Yep.
If I'm playing in the middle of the range and I'm like I'm forcing things, then that's just a bad call. If I'm playing like without any key levels in mind, that's pretty much a bad call. Unless you're like late to a trade and you're trying to get in at a pivot low on the way up or the way down. But
Yep. And guy,
oftentimes I'll let it slide.
yeah, man, and it gets to a point where you got to notice a pattern because I know a lot of you guys will emotion trade, and then the idea ends up working out. And at the end of the day, man, if it were to go along with your strategy, it shouldn't take 3 or 4 times. If you miss it, sucks to suck. Next. And that's honestly been my perspective. I see it happen the way I trade using high volume nodes as support and resistance. I'll see that there's days where it literally just dances around the high volume node. I'll get stopped out once or twice and I'll just be like, all right, I'm done. You know what? Let me wait for something better to form because my strategy as is isn't working. So I definitely think, it's going to take time, but, you can figure it out.
You've been asked a lot recently, White Phoenix. Dude, yeah, just come up on stage, man. Just come up on stage. I don't even know what you're doing.
No,
If you have
but
something to say, just come up here.
but I
I'm a spectator,
Oh
bro.
my
I didn't
God,
want to
what
come back
You
was
up.
said that
that,
you
bro? You sound like a
you said that
goblin.
you
What's up? No, I'm kidding. No, I mean, ask that question. I don't know. I forgot to reply to it. It wasn't like direct, like a trick question designed to trick you intentionally. I mean, like it was literally a question that people were asking me in my last stream that I just realized I forgot that I had written down, so I posted it. because I didn't answer it. So
Yeah, if it's a very key level, man, and I'm like, and I'm trying to get in at a more or less catching a knife kind of an effect, you know what I mean?
mm-hmm.
Then, yeah, I might hit it once or twice. You know what I mean? Like,
Yeah.
if I get stopped out, for instance, like right here is a good example. If I get stopped out here
Mm-hmm.
and I see this, then I'll take that. And that actually was the case because for me, I ended up getting in here, I locked it in, and then I got stopped out on my trade. And then I ended up getting back into my trade after getting stopped out at like, I don't know, I can't even remember, 62.7, and I rode it all the way back up to like 60, I don't know, 69.7. So yeah, it just depends on the circumstance, man.
Yep.
Just depends on the circumstance. There's other times where I'll get stopped out and then it'll immediately reverse on me.
And
Like
yeah,
I
yeah.
ended up getting stopped out here after taking nearly 1.5% profit, came back down, wicked everybody out last night at 1 o'clock in the morning, and then pumped up. And by the time that I woke up this morning, we were already at the range high. So, by then, what are you going to do? Like, for me, more or less, I'm just going to have some patience and see if we get a reversal back down for like more of a key level in here, or if we're just going to pump up. So if we pumped up, then that's cool too. I ended up taking a scalp short, literally right from the top all the way back down to the bottom, and I pretty much checked out right on the swing fail. So
Nice.
if this goes any lower, I don't really give a crap because the potential is there. But I'm just going to take the money and run because, quite frankly, I still believe this is bullish. So I'll take 2%. I'm fine with that.
Yeah.
No, yeah, that's a good one.
My entry was like 73, 753 or 743, and I ran this down. So
Yeah, I actually missed the short today because I wasn't feeling good, so I missed it. But that's okay because, like I said, the catching a top thing doesn't really matter to me. There's always way more ways to get in, so it is
I
what
didn't
it is.
catch the top. I caught right here, but close enough
Yeah,
to
that's
the
nice.
top.
That's a nice one, though. Yeah, that was a nice one. Nice Model 1 distribution, break of structure, back test, beautiful entry.
Yeah,
it's a good
it was a good one. It was a good one for sure. And then look at this, like all this liquidity just sitting in here, right?
Oh, yeah.
Like all this right in here. So,
what I was going to say, though, I don't want to take over your stream by any means. I just want to comment. I agree 100% with what you said, by the way, to that question. I have a limit. Like, I find I have to kind of set a limit for myself. Like, personally, this is just me. I mean, obviously, there's many ways to do it. There's many ways to trade. I limit myself to 2 tries per attempt. So like if I think as I like my level and I get stopped out in the first attempt, whatever, I'm not going to do it 4, 5, 6, 7 times because you got to do the math and have common sense, right? Because if you're only going to net 3 to 5% off a trade and you're throwing 3 to 5% away to get that trade, I mean, what sense does that make? You know what I mean?
no, it's a good point, man. And I've been down that road before where you're like,
it's easy to get
know,
caught up.
it's pretty easy to get like caught up. Like for instance, if
Yeah.
we were thinking that we are just going to come to this point of control at 73K and you're like, oh, it's coming back down, it's rejecting. Wait, it's coming back up. Now it's rejecting. Oh, what are you going to do, right? Like that's why I tend not to play the center of the ranges too much. And I kind of like playing the extremes of the ranges because then you're grabbing like fresh liquidity, right? Like, but to your point, man, like, we've all been down that road. I've been down that road. There's no shame in me saying it. And the problem that you have when you do that, where you're just like, oh, it's for sure, and you get stopped out. And then you do it 3, 4 times over. And then you finally get your, like, let's say you finally get your winning trade, right? And you run it down. By the time that you exited your trade, you have broken even by all of your mistakes, right? That's all you did was make up the difference from being a complete degenerate from a level that just wasn't working out, right?
Yeah.
Like,
Yeah, exactly.
So,
Exactly.
you finally hit your winning trade and you come all the way down and you close out and you're like, yeah, that was a good trade. And you look at your account and it's the same as when you started earlier on in the day or the week or whatever it may be.
No.
Like you just made the money back that you actually lost from sitting here just trying to take trade after trade after trade, or, you know, like this crap down here when things get choppy, you know. Actually, that's
That
probably not the best.
that
That's
was a
probably not the best example because this is like 1.5% moves back and forth. But
that was a
you
beautiful
guys get my
long.
point.
That was a very beautiful long. I patted myself on the back with that one. That was a nice trade. Talked
Yeah, it
about it
was
last
good,
night.
man. It was
Talked about
good.
it last night. So.
It was a nice swing fail this low, and
Mhm.
after you got off, matter of fact, I remember like on the 2020, we were looking at 2021 historical charts. Look at this.
Mhm.
2021 data.
Yeah, when was that?
2021 data.
Yeah, when was that low though?
That was last night,
That was last night.
like at
Was
10:30,
that like,
while we were streaming.
well, yeah, it was like 10:30, 11 o'clock.
Mhm.
And I'm like, how funny. I even said to the few people that were in the chat, I'm like, how funny would that be looking at 2021 historical data and we actually bounce here. We don't come back down to this 15-minute order block. And I'm like, yeah, it's 11 o'clock. I'm getting off. I woke up in the morning. Bam. That was it.
Was that this
That was the
morning?
trade.
La- no, it was last night.
It's like
Oh, last
1
night.
o'clock
I
in the
was
morning.
sick as a dog last night, bro. I missed that. New York today,
Um,
I'm not going to lie. I don't know if any of you guys got along on it, but I certainly didn't. I looked at it and I was like half cocked waking up. I looked like Thor when he wakes up. And, that cat gif you always post, I looked like that this morning.
I
And I was
swear
like,
that's how I look every morning, dude.
I woke up, bro, 3 minutes into the open. And I was like, oh my gosh, I slept in. And, I was just a disaster. I would never have gotten that long. And I looked at it like even in hindsight, and I was like, damn, like that was a tricky one, man. Because it was just so aggressive for me. So I don't think I would have taken that one, but yeah.
I didn't take the long. I did take the scalp short, and now I'm just kind of chilling. Like, I know we shouldn't be doing this right now, so I'll make it brief. But like, I think by the time that I woke up, we were retesting range highs, and I'm like, okay, well, if we find a rejection here, then maybe we get something into this 30-minute order block. If we don't get anything into that 30-minute order block, then maybe we come back down to like retest 68.5, which is the 6-hour order blocks. There's reasons, you know what I mean?
Yeah.
But I wasn't willing to just like jump in immediately, waking up in the morning and getting into a long scalp.
Nah. I held my long overnight, man. That was fun. I woke up and I got alerted because Jay was like, "Oh, the long from yesterday," because I guess he got into a long too. Worked out, and I was like, "What?" I looked at my Bing X, and I was just like, "Oh crap, damn! Close out,
I'll
close
tell
out,
you
close
guys
out."
this, and then I'll tell you guys this, and then we'll get back to like some of the basic fundamentals about like how to plan out a trade.
No.
Because we talked about this 2 nights ago, me and White Phoenix, along with the group, and oftentimes people, you guys, I said the same thing that I'm going to say now. You guys are really good at finding your entries, and that's awesome. But what I see throughout the channels is that you guys found your entry, or you listened to one of the instructors and you got in on one of the entries, and then you don't know what to do afterwards. You don't know where your TP is. You don't know like where you're going to exit your trade. And that's a problem. It's a huge problem because, quite frankly, in my mind, you shouldn't even be taking a trade unless you have a complete plan. Meaning, you have an entry, you have your stop loss, you have a planned take profit, and you have a planned exit. And you stick to that. So by the time that you entered that trade and you told yourself you're in for a scalp, you're in for a scalp. You don't necessarily change your mind halfway through and go, you know what, I'm going to hold on to this because now I don't think it's a scalp. I think it's a swing long, or I think it's this, or we're going higher. You got to stick to a plan, man, and just be happy with whatever you get. because at that point you'll live for another day and you'll be able to take another trade. And you won't round trip, because I see a lot of people that round trip, and it's due to not having a complete plan. So that's really important. Guys, as far as like the PA right now, 6 hour time frame is kind of rolling over here. Okay. It's getting toppy. Like it's starting to roll over. 2 hour time frame is already rolled over. Once you kind of get to the 30 minute is kind of fading here after some bearish divs right up until like 74K. That was a range high. We previously had that marked out. I gave it to you guys in my channel. 15 minute is fading. So once you see these higher time frames, somebody said market cipher. So I'll use this for instance. When you see these mid time frames kind of topping, you need to go down to these lower time frames as far as the oscillators are concerned and start looking for the bearish divs. If you start to see bearish divs in here, like the 30 minute bearish divs, 15 minute bearish divs, 10 minute, you see that money flow is starting to fade here with bearish divs into a key level. 5 minute, same thing, starting to fade here into a key level with the mid time frames rolling over. You guys could be looking for potential shorts here. This was a pretty key level right here. So, and that's not to say that you need to catch a knife, but you could tell even on the 1 minute time frame, like 1, 2, 3, like it was starting to fade. The oscillators on the higher time frames were starting to roll over, and the lower time frames were starting to fade with the bullish divs or bearish divs. So it, it was a pretty good scalp, and you have to treat it like a scalp. So for me, that's all I did was treat this as a scalp. Once I kind of saw a break here, I entered at 73,843, which is like right in the wick of this, man. Literally right in the wick. And typically what I'll do is if I know that it's a scalp, I'll take half of my position size out at like 0.5%. So I'll take the measuring tool and I'll kind of mark out like 0.5%, give or take, because I'm not like, I'll pull it from the high, not my entry. Don't do that. Don't pull a measuring tool for like 0.5% off of your entry. You pull it from the pivot high. All right. So if it's a little bit less than that, then I'll lock it in. And once I lock it in, then I'll set my stop to my entry, which was right up here. And then I'll let it ride, man. I'll let it ride. I'll let it ride all the way back down to the range low. Now here you have a low time frame break, but all I got to do is move up like 1 or 2 time frames to see that we have a swing fail in here. And once I saw that with the bullish divs on the lower time frames, I cut the trade. Is there a good chance that this actually breaks down a little bit further? Yeah, it's possible. With the 6 hour actually rounding out, I think that we will have a retracement and probably some reprieve in here. Does it matter to me? No, because my objective was already reached here to here. That's it. That's all I planned for, and I'm staying with the plan. That's it. This could actually dump down further. Maybe we come back all the way to 71.5 and retest 71.5. That was the range high that we've been playing in for like 2 weeks. You can see on the higher time frames, we never had a proper back test of this. Is it plausible? Yeah, it is. We've already had a swing fail locally. And in the volume profile, I can tell you guys right now that there's not a whole lot of volume in here. Okay. Volume only picks up right where we broke away from this range high. So either we hold here and we start pushing up, or you're going to break 72.5 and you're probably going to come down. Either way, my point is I don't care. My objective was completed, and that's all I was aiming for. And that's all there is to it. I'll live to trade another day. I'm not looking for like, I still believe that things are a little bit bullish here, and I'm still looking for this 12-hour order block to be tagged. I'm still looking upward of like 76, 75.5, somewhere in here. I've told you guys 73 to 76, so I wasn't lying. I mean, here we are. I've been stressing that point ever since we put in these lows. I'm like, we're going to 73 to 76K. I was pretty adamant about it, and here we are. So, yeah. As far as like planning out your trades, it's pretty easy to do. The reason why I trade like this is because it's just a basic supply and demand. Like, I'm a range-based supply and demand trader. I'm looking for the inefficiencies. I'm looking at volume. I'm looking at the ranges, and that's really all there is to it. Like here on the 4-hour time frame, if I was to just clear this out, for me, I can clearly see that we have a range in here, right? That's plain as day. If I was to highlight the range, I'm not going to go from the candle, like from the wicks, I'll go from the candle bodies. You can do whatever you want. It's completely irrelevant. If you want to go from the wicks, then you go from the wicks. I have no issues with that. Matter of fact, I'll bet that we're retesting this wick high right now. You guys see that? If you want, you could do something similar to this. You can actually highlight the bodies and then put your lines in for the wicks. I don't care. Do it however you feel comfortable. For me, it's I go from the candle bodies. And just highlighting this, now that we have this range, like, we can play the range. At the highs, we're looking for shorts. At the lows, we're looking for longs. You guys can tell how rather accurate this has been. That's a pretty good long, wouldn't you say? Like, you had your deviation down here, you had your back test, off to the races. So once you have something like this, you can kind of go in and you can highlight the internals. Like, even in here, I can clearly see that we had a range that was sitting right in here. We'll call that an internal range. I can highlight that on the 4-hour time frame. We can go from the pivot high to the pivot low. We can change the color. We can pull this over. We can do something like this. The idea is that I break it down to something that's palatable. All right. Like, this is very simple approach here. I'm just kind of trying to make my point, but this range in total is something like, 13, nearly 13.5%. Do I need 13.5%? No, I don't. But what I can do is I can take these internals and I can highlight them, and I can start to break this range down to where it becomes palatable to trade, to where I'm not sitting here from February 8th all the way to February 24th, the entire month, waiting for a short or a long, right? I can go in here as well. I can kind of like tell you guys and break it down a little bit more. For instance, I can see right here that we have some internal range structure in here, right? Like, if I was to just highlight this, I'm going off of the 4-hour time frame. Would that have been advantageous for me to possibly be looking for shorts, seeing how aggressive this moved down? And then the back test here? Yeah, of course it would. Is there volume in here? Absolutely. It was a range, guys. There was a range in there. Same thing here. We had a major deviation. It actually cleaned up the whole fair value gap all the way to like 70.2. And then you guys can kind of see we had another deviation here, but again, just highlighting that helps me break down this entire range to look for different opportunities. And then I'm going to play it that way. Like, I'm totally going to play it that way. All right. Like, if I find a rejection from here, then I'm going to look down to here. And if I look down to here, I'm going to look for a bounce up, right? So again, this is, I'm just trying to prove my point. I think you guys get it. But oftentimes what I see too is like people have so many lines and different things on their charts, and they have volume indicators, and they have VWAP indicators, and they have anchor VWAP indicators, and they have this indicator, and they have exocharts. And it's like, dude, by the time that you guys by the time that you read into all that information, the play had already happened and you're already late to the party. And if that didn't happen, if it didn't happen that way, what's going to happen is you're going to have paralysis of analysis because you have so many things that you're trying to find confirmations on just to take the trade. Just take the trade. Like, this is such a simple approach. The way that I do things is such a simple approach. It's market structure and supply and demand. And believe it or not, I didn't learn this from like White Phoenix. It just so happened that me and White Phoenix have a very similar trading style. It's not exactly the same, but you guys can tell how many times we get into a live stream and we agree with each other on what we're talking about and what we're actually looking at. It's just a slightly different approach. So, yeah, I mean, even here, we can highlight this. Would this actually be a key level? If we came back up, would this be a key level? Absolutely. Would I be looking in here? Would I be looking for the range low? Yeah, I would. I can see that there's some things, some inefficiencies going on here. Could we come up a little bit higher? Absolutely, we could. What is the range low at? 74.9, 75K? Where do we fill the inefficiencies? 75.6? Yeah, I'm definitely going to be looking in here. It's on the 4-hour time frame. Does the 6 match? You can bring it up a little bit on the 6. Yeah, I see a lot of people. I see a lot of people that like cut their trades prematurely. I see a lot of people who round trip, and at the end of the day, it's mainly just due to the fact that you guys never had a plan to begin with. Like, you did not have a take profit area, and even if you did have an entry and a take profit, you didn't know exactly where you were going to end your trade. It's also a psychological thing too, guys. Like, you get into a trade, you're making money, you're up, you think it's going to go higher, you get a little bit of a retracement, you've already sold yourself on the idea that it was going to go higher, and then it sinks and you round trip. And that's greed. There's nothing I can do about greed. You
Absolutely.
guys got to work on that. So it's just the way that it goes.
And I think that's what's cool about the journey is that, guys, a lot of people, it's hard when you first get in here to get that greed knocked out to the side and not let that guide you in your trading. Because Thor, me and Thor, we see it all the time, man. Freaking where people are getting in great trades. And then all of a sudden, an hour later or the next day, yeah, I got stopped out. Wait, what? Did you take profit? Nah, I didn't take profit. What? You guys got to
Here's
have a
another
plan.
here's another thing that people get lost on too is you guys like oftentimes tend to zoom in. It's fine if you're going to scalp, okay? It's fine if you have been playing this game for a very long time, years and years and years on end, okay, and you know what you're doing. It's another when you don't, like when you're newer to trading or you're intermediate trader. But oftentimes it's pretty easy to get lost on the lower time frames and go, oh my gosh, we're going up forever. And in actuality, you haven't really done anything. Let me zoom out here.
We've swept some highs. That's it.
You haven't, like we're all talking about how we broke this range, when in actuality, you didn't break the range at all. You rejected right from the range high. So bear that in mind too. For weeks we've been talking about actually coming back up to like 73 to 76K and retesting this previous range low, of which was kind of deviated when we did break it. But White Phoenix and me, we've been talking for quite some time, like how eerily similar things are to 2021. Within the range, you had a bear flag. You broke down, right? And then once you broke down from this range, we've been talking for quite some time about another bear flag. Where would we actually get that idea? Well, we can look back historically and see that the very same thing happened here, guys. Your bear flag within the range, your breakdown, your bear flag where you come back up and you retest the range, and then you have another breakdown. Awfully similar, right? Let me zoom out a little bit. Doesn't that look awfully similar to you guys? The only difference is we really didn't have this to to contend with back in 2021, right? We didn't have anything here, but again, see it? Same exact concept, same exact thing. The only thing that was going to change my mind on that is if the fact that we actually broke 60K and headed lower. And I talked about it last night. I'm like, if we break below this point of control, I think it's pretty much going to be bad news bears. I know that you have the overall macro golden pocket sitting right at the range low, but most of this stuff in here has been mitigated on the way up. You already tapped into the value area. There's not a whole lot down here on the lower time frames to speak of. When you had your deviation, you already back tested this. A lot of this stuff has already been mitigated. So that's not to say that you couldn't come down here and find some type of bounce, but you break below this overall point of control, and it's more likely that you are going to come back down to the range lows. And then we're going to have to contend with either breaking it and heading lower, all right? Or miraculously find some type of bounce in here. From what I see, I don't see a whole lot, but that doesn't mean it doesn't exist, okay? The idea is to like break it down to where it's palatable and then trade it. You have an entry, you have a stop loss, you have a take profit, and you know where you're going to close your trade, and you don't deviate from that plan. You don't deviate from that plan. You don't take your TP and go, oh, you know what? I'm not really sure. It's questionable. You've already locked in your profit. You have nothing to worry about. If it comes back for your stop, you just look for a new trade. There's been quite a few times where I've already taken my first TP. You know, it's kind of just sitting there. It's taking some time, and then bam, you know, you run right into my exit plan.
Yep.
And yes, there's also going to be times where you do this. You've already taken your TP, and then bam, it knocks you out, right? But yeah, I don't deviate from a plan. I don't deviate, and I definitely don't deviate from a plan after taking a take profit, a TP1, because you're already in the trade, man. You've already locked it in. What do you have to worry about? Yeah, yeah. You guys can see on this chart too. For instance, this is obviously on a higher time frame. This internal range that's sitting in here, 86 to 78.4. We often had a lot of deviations of that, but like even for like right here, for instance, perfect touch, ran it right up to the range high of 90.6. If you want to play this, you can. If it's advantageous to play this, then you can. And that's why I love breaking it down this way. You'll notice too that I don't break it down too much to where it's like I've accounted for every little tiny thing within the range, right? Because we can do that. We could go down to like the 1 minute time frame and start accounting for everything. But the problem with that is that where does it hit, right? Like, oh, we're only going to come up to here, but then I have a level here, and I have a level here, and I have a level here, and I have a level here. Now, just try and just keep it as simple as possible and keep it to the key levels. It'll help you. It will. It'll help you.
Yep.
For me, this helps determine where my entry is, where my stop loss is, where my take profit's going to be, and where my exit's going to be. You guys remember 90.6 because 90.6 was like, I told you guys about 90.6. Look at this. I said 90.6 is it, guys. That's it right there. Why was I so adamant about 90.6? Well, because you closed back within this range. You came down and you tapped on this internal, so you mitigated 80.6. If you reject from here, you're going to slide right through. This overall range was on the 2-day time frame. I have it marked on the 2-day time frame. Your overall range was on the 2-day time frame. Bam. Look at that rejection, man. That was a beautiful setup.
Yeah. And you could see how it was acting as support and resistance before that. That was, and guys, a lot of this, I know some of you guys might get lost in the weeds and think this is harder than it seems, but this is all support and resistance work. If you look at that, if you look
It's
how,
based on volume.
yeah,
Yeah.
and that's the thing, like how you guys should be trading stuff, break, retest. That's how you trade support and resistance. Whether you break the range high and then you retest it before you go up higher, whether you break the high volume node, then retest it before you go lower. Like it's all support and resistance, you know? It's nice and it's really nice and I like the way Thor does it because it gives you your levels of support and resistance because not every level is going to work. You know what I mean? Like but you need to have a game plan of, "Hey, where can I expect to see some selling pressure get in? Maybe I should take profit there just in case." It's your insurance and having those leveled out, you can see where buyers and sellers have an opportunity to get in. And I think Thor does a great job drawing out his ranges. It's almost predictive of where the support and resistance is going to be at, you know? So,
I told you guys Tuesday for New York Open that I was very interested in actually taking a long from 65.8, and you guys can see sometimes things just don't necessarily work in my favor. I know what some of you guys are going to say, where you're going to be like, "Oh, well, it was, obviously Thor, it was demand. You had your 2-hour order block sitting in here, and you filled the 1 hour fair value gap. You had it was such a given." And I told everybody in New York Open, I'm like, look, if we come back down here, we're going to put rounds of bullish divs on these lower time frames. And you got a very key level here. And I was front run by like $200. I get why we actually had our bounce.
no.
Now, you have a decision to make at that point. I've been doing this quite a long time. I'm not going to chase price. I'm not going to chase price. There's a lot of times where I get a great setup here, here. Okay. You had your deviation. You couldn't close below. You had a nice back test. You could have ran this up. That was fine. All right. You had rejections in here. We could have ran this down. Okay. These levels matter to me, but it doesn't mean that they're always going to hit. But one thing's for certain is I'm not going to chase price. I'm not. And then I told everybody, I'm like, look, if we can hold this point of control, of which we did, guys, all I have to do is move to the 4-hour time frame to see that we actually closed and held right on the point of control. I said, if that's the case, I'm looking for something like this, a retracement after cleaning this up on the 1-hour time frame. No, 6-hour time frame. We had a 6-hour like fair value gap sitting right in here. And I was looking for a rejection from around 68.5, and then it bounced from 67.8. Was it close? Yeah, it was close. I actually took the long from 67.8 and I ran it up before actually Asia took me out. But that's the way it goes. That's the way it goes. See, the thing is like, you may not catch every move, but when you do, they're going to be so sweet,
Hell
right?
yeah.
Like it's the little ones that you're going to make your money off of. And then, yes, you will get these at times. Yes, you will get these moves up at times. Not all the time, but you will get them at times. So no, I'm not going to chase price.
No.
That's not how I operate. It didn't come down to 65.8. I saw the bullish divs. I saw the reasons why, guys. I saw it, but it just didn't come down to my level, and I'm not about to chase price.
No.
See, if I chase price and I'm like, oh, I missed it, right? I did that here. I did that here when I thought that we were front running. We actually swing filled this low. I got in and I was fortunate enough to lock in TP1 before getting stopped out. But I thought that we were getting front run here at 63.9. 63.9 is a 1-hour range that kind of sits right at the bottom here, guys. And we tapped right into it. And I'm like, dang, maybe it's not coming for the range low. And I got in. But to my point, like, let's say that I did chase price and I got it in here and it just immediately rejects from the point of control and poops all over me, right? and then I smell like poop for the rest of the day.
No.
No
And that
thanks, man.
and that's one thing, like, because Thor, he's been doing this for a while. He respects his levels and stuff like that. The newer people, I know it's sometimes hard to find a strategy that really works for you that you can be confident in. But if you guys start getting better with position sizes, you can take an account. You can throw 2 or 3 confluence together, find a zone, and then be able to trade that, risking the same amount as we would trade on little scalps. Because at the end of the day, you should still only be risking 1%. So, but that just means your trade's going to be a lot smaller. And a lot of people don't feel like doing that. They want that quick money. So it's all about the confluences you can put together and the strategies that you're confident in. But you could have easily, with that trade, just looking at it now, got in at the order block, and then if it goes below the range low, that's when your stop loss is out, and you could risk only 1%. But again, your position size would have to be
My
a lot
position
smaller.
size would have been a lot
A
smaller.
lot
And
smaller.
then at that point, like, I have to ask myself, is it worth it or not?
Yeah, and that's the biggest thing. That's the biggest thing, because if you have a stop loss that's super wide and it's a 1-to-1, it's like, was it really worth even getting into that trade?
If I miss the trade or not, because I'll find others.
Yep, they're
But
always
for a
out
lot
there.
of people, when they're new, it's like, oh my gosh, I missed a trade again. Oh my gosh, I got stopped out again. And it's like that dopamine hit every single time, man. And I'm way past that. I hope that I can stress the point to you guys that patience is a virtue. All right, like, you will live to trade another day. It's not the end of the world if you miss a trade. It's not. It really
Yep.
isn't. Let's somebody asked me about market cipher. Let's go over what happened here since we're on the topic. First off, I've been very adamant about us going to 73 to 76 ever since we came down to the range lows and retested range lows. Why is that? Well, I've been doing this is my style of trading for many years. I know that when we come to these range lows, I should be looking for longs. All right. It's going to be a given every single time. I have so much confidence in the way that I trade that I'm going to be looking for longs at the range low. Why would you not? Right. And another thing, too, is that we knew that on the weekly time frame, that the weekly was starting to round out at that point. All right. We had a nice anchor on the weekly. And then Sunday, it finally confirmed. Okay. It finally confirmed, which is why we're getting this move up right now. Now, that's not to say that it couldn't reverse, right? Like we've seen it before, like where on lower time frames you kind of get it, you confirm it, and then bam, you get shoved down again. These high time frames matter, guys. Like the higher the time frame, the more confidence you should have. All right. Another thing too, just because the weekly is bleeding does not mean that you're not going to get something out of that weekly time frame being anchored out. But let's pair it together. It's really important with market cipher that you kind of pair all of these time frames together. So we know that the weekly was anchored out. We know that we were getting ready to bottom on the weekly. Let's move to like I don't know. Let's move to like the 12-day time frame. All right. Here we go again. 12, not 12-day, but 12-hour. What do you guys see here? We know that the weekly is anchored out. We know that we're getting confirmations here. We know that the 12-hour is starting to push up here, right? No, we don't have bullish divs on those time frames. That's fine. You don't necessarily need bullish divs for a move up. But the 12-hour is kind of confirming with the weekly. We know that the weekly is anchored out. We know that it's rounding out as a bottom. We know that the 12-hour is starting to come up here a little bit. Let's take a look at 6. Okay, 6 hours not that bad. 6 hours still kind of coming up here, bleeding, but you guys can see this, right? We got this going on in the 6-hour time frame. That doesn't look all that bad. It doesn't look all that bad. Let's move to the 4-hour time frame. 4-hour time frame was kind of, we were kind of playing that game of like hidden bear div, which actually brought us back down to the range lows, but we finally got a break of that, and now we're getting move up. Let's talk about like what's going to happen here, right? Because I wanted 65.8. We know the direction now, okay? My point is like if you guys are spending all this time on the lower time frames, especially with market cipher only works if you're going to look at multiple time frames and put them together, right? I proved that like at 73.9. 73.9, the 6 and the 4-hour are starting to round over, okay? They were oversold and starting to round over, while the lower time frames were showing like that they were starting to fade. That does not mean that it can't reverse. We can't just get shoved up even higher. But it's when you put all those time frames together on Market Cipher that they work. So here, we're expecting a move up, especially with the weekly and the 12-hour time frame showing us that we're bottoming out and we're kind of moving up. That's after tapping into the range low. We wanted our retracement back down to 65.8. Let's take a look at what's happening here. Let's go to the lower time frames. Let's shove down to like even lower time frame. We'll go to like the 30-minute and beyond. So a couple different things. We had some gaps in here. Like when we actually bounced from the value area, we came back in, we never back tested 65.8. We know that's internal range. We know that we were anchored out here on the 30-minute time frame. We know that if we get another shove down, we were looking for some bullish divs here, and that would have worked out really nice. Those are the things that I had mentioned on Tuesday morning's live stream. Let's take a look at the 15-minute. 15-minute, same thing, right? Anchored out, meaning if we actually get something like this, we're going to put a round of bullish divs into a very key level. That's what we're looking for. Things weren't looking so bad on the 15-minute. Let's try the 10. 10-minute, same thing. So from the 30-minute on down, we were looking for bullish divs here. Money flow is coming up, and we were looking for a very key level, 65.8. Never mind the 66. Forget that even happened. Stupid. So stupid. Yeah. So you guys see how that's working, right? How we can actually go from the higher time frames and actually predict what direction we should be moving in so that we can go, okay, it makes more sense to look for longs here than it does shorts. I suspect with the weekly and the 12-hour and the higher time frames anchored out the way that they are, that we should be getting some reprieve. Same thing, bullish divs. Here, 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 here. Look at money flow. It looked really good. It was a great setup, guys. 66K was a great setup. Same thing, bullish divs. So that's another thing too. If you're going to find bullish divs on the 30-minute, you're probably going to find them on every single time frame below the 30-minute. If you find them on the 1 hour, which you did, technically speaking, you did have a bullish div here on the 1 hour time frame. After closing this gap, that means you're probably going to have them on every single time frame below the 1 hour time frame. So that's what you're going to be looking for. You have to look for direction, man. You can't excuse the higher time frames. You can't. I mean, I don't know what everybody's expecting here, but like after seeing even going from like 90.6 all the way down was a 36%, 34%, right? Like I know things can get wild, but when you get pushed down like this for 33, 35%, we should expect some reprieve, and we should expect some reprieve when the weekly is anchored out. You guys have to start using all of the time frames to put everything together. Let me fast forward just a little bit here. Let me give you one more example. We'll go back over why I took the short from 73.9. It's not to say that you can't short while things are going up. Like if you are looking for some type of reprieve and you want to short this down for just a scalp, then you treat it like a scalp. If things are bullish, you don't go, oh, you know what? I'm gonna go heavy on a short right here because this is going to zero when things still look bullish. No, you just treat them like scalps. It's a retracement, right? So again, we'll go from the 6-hour time frame because there's no sense in going any higher than that. The 6-hour time frame is one of my most favorite time frames. You guys can see, like, we're well above the 60. We're oversold. We were starting to like round off here on the 6-hour time frame. Yes, we know that money's coming up. Doesn't necessarily matter to me when we're hitting a key level like 73.9 and I'm only looking for a scalp. All right. I'm just looking for the scalp. Let's take a look at the 4-hour. The 4-hour was doing the same thing as we came up to 73.9. It was starting to round over. We were well above the 60. We're in oversold conditions. Okay, cool. Let's start working our way down to the lower time frames. Pretty much from the 1-hour down, you had bearish divs. So not only are the mid time frames rounding over, but we see bearish divs on the lower time frames into a key level. How about this? Let's go to the 30-minute. 30-minute too. Like oftentimes with an oscillator, it's deceiving because you see money flow like up here and it's peaking and it looks really good, right? Well, with an oscillator, that's the way it works, man. Oftentimes things look really good with the money flow. And that's probably the time that you should be looking for shorts because when the money flows like peaking out like this, what happens? We usually get a dip. So we know that the 6-hour, the 4-hour, they were rounding out. The 1-hour had bearish divs. We had bearish divs here on the 30-minute time frames, right? And that goes all the way down to like the 15, the 10, the 5. Okay, now we're sinking a little bit lower. What's happening here on the lower time frames? You've been putting rounds of bearish divs ever since we were at like $69,000, $70,000. Here, all the way down, you can see money flow was fading, right? Money flow was fading into this level. It was plain as day, right? Let's go down to like the 2-minute time frame. Same thing on the 2-minute time frame, guys. Things were fading on the lower time frames while the mid time frames were rounding over in oversold conditions. Market Cipher is a great tool so long as you know how to use it. Market Cipher pairs well when your technical analysis is on point. I kind of had to learn the hard way as I kind of came up with my own plan and my own way of kind of trading here, okay? But I can tell you that an oscillator pairs very well with somebody whose technical analysis is on point, all right? Meaning like your levels are good. If your levels are bad, the oscillators aren't going to help you as much, all right? They're not. What do we have here? Well, market structure kind of comes into play once we start getting down to the lower time frames. We did have a higher high. We broke that, okay? And then we came in for a lower high before another lower low, lower high, lower, okay? So we did kind of break in here. I know what you guys are going to say. This is more or less internal in here. And that's kind of more risky because technically speaking, this was our structure. This was our higher high. But we had a bunch of different things on the oscillators telling us that we were running into a very key level. And I was looking more or less for the break here. All right. Call it what you will, a change of character or whatever, or even a break of, it was even a trend break. If you want to look at it from that perspective too, you even broke the trend. Like you had this uptrend and you broke it. Done. Boom. You didn't quite come back up to the range highs, but You didn't necessarily have to either. All right. You didn't necessarily have to either. And if you wanted to look at it from a different perspective, we could do something like this. We could play the ranges. We know that we had a little 1 minute range in here, right? Look what happens once you lose it. Could have got short here too. Could have got short here right into this order block. So there's a couple different ways that you could be looking at this, but it was a range high at 74K. And we did see a breakdown. The trend was kind of lost here, guys. And not only that, but on the 1 minute time frame, things were fading. Things were definitely fading. So again, you can see the importance of actually pulling up the higher time frames, especially the mid time frames, and correlating them with what's going on the lower time frames. You match that with like good technical analysis, supply, demand, you understand structure, even from basic point of view, then you'll do quite well. You'll do quite well. I got to take this magnet off. Yeah, not really your trend there, but yeah, you guys see what's going on. Now here, you know, this is going to trip people up too because they're looking at the lower time frames all the time. Yes, you did have a break here. All right. You did have a break. This was the most important low of this range right here. That was the most important low because if I shift up time frames, you're going to see that this was a swing fail. Not on the lower time frames, but on the higher time frames, that was a swing fail. This was your main pivot here. That was your main pivot. This low was the most important. Did you break it on the 1 minute time frame? Yes. Is the possibility of going lower still there? Yes. All I need to do is move up to like the 10-minute time frame. And now all of a sudden the picture changes dramatically. You actually had a swing fail this low. Then you had a reclaim. That reclaim is probably where I would have went long and at least ran this up to the point of control. Could you do that? Yes, absolutely. But you have to start thinking about things here. Like if you're having a deviation and a swing fail this low and then a reclaim and a bounce, right? Do I have enough room to even entertain a long, and where is my exit going to be? Well, the overall point of control of the range sits at 73.1. Could I have scalped this for 0.86% on leverage? I use the measuring tool because all of you guys use different leverage. All right. I could use something else. I could use this. That's fine. No, I don't even have it marked, do I? I don't even have it marked because I never use them. Could I do something like this? Yeah, absolutely. You're more than welcome to do that. That's fine. You know, like what low are we going to cover? I'm actually just going to cover the range low. I'm not even going to cover this pivot low. Would that be worthwhile? Would a ratio of 15.61 be worthwhile? You tell me, guys. You tell me, right? But I'm not covering this low. I'm just covering the range low, and then I'm going back up. So yeah, was it worthwhile? Yeah. The measuring tool is just a really easy way to explain my point of view here. Like nearly 0.9% on leverage, no matter what the leverage is going to pay you. All right. But that's how you can break it down. You can go, okay, well, if I get long here, I'm going to have my stop loss just below the range low. All right. And then what I'm going to do is I'm going to have a take profit after about 0.5%. And then I'm going to run this up and I'm going to cut my trade at the point of control. That's a plan. What isn't a plan is like, okay, I got my entry, my stop is here, but I don't necessarily know how high this is going to go. I don't know where it's going. Then we reject from a point of control that nobody has, probably other than me right now. And then you come down and you get wicked out. You get stopped out, and then you round tripped your entire thing. You would have made money on this trade, but you didn't because you round tripped. 73K is the point of control of this overall range, guys. That's where most of the volume's coming in. Makes a lot of sense. Yeah. What if you don't? What do you do if you don't have market cipher? Well, markets like structure. You guys have to learn the basic fundamentals of structure. Like structure is key here. If I know that if I know that this previous range sits in here on probably the 6-hour time frame. No, it does not sit on the 6-hour time frame. We need to expand on that some. It's probably like 1-hour time frame. Yeah, it's 1-hour time frame, guys. So the way that I draw my ranges, and I've explained this numerous times, is that I go with the highest time frame possible that captures majority of the price action, but shows the structure. Okay, it's got to show the structure. I don't care about the wicks. Look, you know what? From my perspective, the wicks are just tentacles grabbing liquidity outside of the range. That's all they're doing. Imagine it like that. Imagine their tentacles just reaching for liquidity before closing back within. That's a good way of looking at it. So the 1-hour time frame is the highest time frame that I can achieve that captures majority of the price action, including the wicks. Not all of them, but majority. There's a difference. And that 1-hour time frame is what I'm going off of. If I shift to the 4-hour time frame, you guys are going to see a clear difference here. What is this? You see? What is this? It's nothing. What about the 2 or the 3-hour? It's still nothing. It doesn't show the structure. Yes, I mean we see that we have, an up candle and then followed by down, right? Like we know something's in there. It's starting to appear. It's starting to appear. The 2-hour time frame is not that bad. It's starting to appear as a range. Now we get to the 1-hour time frame. Look how nice and neat that is. We can use the 1-hour time frame. That's the highest time frame possible that captures majority of the PA. And then what I can do is I can go in here and I can pull a volume profile over this, and I can see where all the volume is coming in off of that range. And again, it doesn't necessarily matter if you guys want to pull from the wicks or the candle bodies. It's entirely your choice. It's entirely your choice. Often I don't see a whole lot of people doing this, and I think it's just because they don't understand it in the same manner that I do, even though I've tried to point it out. But this works, guys. This works. This has given me some like laser sharp entries. Laser sharp entries. Anybody that was pulling from the wicks here, they're pulling from this and they're pulling from this. Well, we never came up to that range high. That's not to say that we can't, because more than likely we will. But in that case, you probably wouldn't have realized that we were already at the range high. Point of control of this range sits at like 73, 139. Again, volume. Did I necessarily need market cipher to tell me that we were playing within a range? No, I didn't. Do I use market cipher all the time to even find or get into an entry? No. I've gotten so accustomed to this, man. I've gotten so accustomed to just looking at the structure that I know that we see a swing fail here. I know that we couldn't close outside the range. I know we should be expecting a back test. I know we should probably expect a run up where, well, you got a 15-minute order block and you have the overall point of control. Did I need market cipher to tell me this? No, I didn't. Does it help? Absolutely. Yeah, absolutely it does. Absolutely it does. Matter of fact, I can tell you right now, without even looking at market cipher, that we had a round of bullish divs here. I'll bet money that we had a round of bullish divs here, just from looking at the structure. Boom. There you go. Rounds of bullish divs. We're going to lose this, guys. I have a feeling we're probably going to lose this because, again, the 6 hour is rounding out. It hasn't confirmed yet, but it is rounding out, and I suspect that we get some type of reprieve. Where would I be looking if we're actually going to get some reprieve? Where should I be looking for a retracement? Well, the first place I'd be looking for is a retest of the previous range we just broke down from, or broke up from, excuse me. 71.5, 71.4, maybe even 71.8. These levels in here is the first place that I'd be looking. What would I be looking for? Well, I'd probably be looking for rounds of bullish divs down here if the oscillators permit. Obviously, the 6 hour isn't going to give us our entry. This is just kind of giving us a direction. I'd probably start shifting down to like the 2 hour time frame. Yeah, 2 hour time frame. We got a little juice here. I suspect that this probably comes up more. I still think that we could see 76K. Maybe I'm wrong. I guess it doesn't matter. But I still think we can see upwards of like 76K. I anticipate it. Again, the weekly time frame is anchored out. It's confirmed. We should get a move up. We have. 76 is a very key level. So what time frames would I be looking at to find an entry here? Well, you're not going to find them on the 1, 2, 4, or 6 hour time frames. That's directional. I would probably look towards the 30-minute and under. All right. I would look towards the 30-minute and under. I can tell you guys right now that we have hidden bullish divs on this time frame. You guys can see that we have hidden bullish divs. Hidden bullish divs are usually continuation. So we know that we have the potential of hidden bullish divs here on Market Cipher, at least on the 30-minute time frame. We know that this is a very key level. If we come down here, and if the 30-minute is anchored out, and if we still have hidden bull divs, whether you take them from here, this pivot, or this pivot, doesn't matter. And we start rounding out on the 30-minute, then I'm going to start shifting down to the 15-minute. Does the 15-minute support bullish divs? Do we have hidden bullish divs followed by bullish divs? What about the 5-minute? I'm going to be working on the 30-minute on down is my point. I'm going to be working on the 30-minute on down is my point. And I'll work all the way down to like the 1-minute time frame to try and find an entry, so long as the 1-minute time frame is correlating with these time frames, telling me we should see a bounce from there. Here's another thing that you guys could be doing too. Instead of trying to catch a knife with Market Cipher, you could start looking for a low time frame break of structure, right? Maybe we see something like this. And then what you do is now you have a deviation, you broke structure, you're looking for a retracement, you found your long, things look better on the oscillators. At that point, the oscillators should really kind of tell you something, right? Instead of trying to catch a knife, they should be telling you something here. And then you can look for longs. There's a couple ways of doing it. You want to catch a knife, you might get cut by the knife. If you want to see additional information on the oscillators and how the oscillators are kind of picking up speed at the specific level, wait for a low time frame break of structure, so long as the time frames support it. Can you guys put this up on YouTube for later viewing? I don't know if Spartan's actually recording it or not.
Yeah,
Yeah, Spicy Noodle. Like, I know, again, I know that there's multiple ways that you can go about it. Casper said it a long time ago, and it's stuck with me ever since. There's 1,000,001 ways to trade and come to the same conclusion. And you can, you guys can start adding Fibonacci's, like the way that I trade. You can start adding a whole bunch of things to this. You can add Fibonacci pulls. We can go from the previous low to the high, right? We can go from here up, where we got the 786. We got the GP coming in there locally. Maybe it's not from there, right? Maybe you want to pull a fib from 67.4. Which was last night's pivot low to the pivot high. What do we got? We got the GP coming in right around the value area. We have a 30-minute order block sitting in here. We know that 69.4 is an internal range low. Things are starting to add up. Maybe we come down here for a retracement. However, what we need to be aware of is structure. we have this as a higher high, higher low, higher high. If you break below this, then all of a sudden we have a low, like now we're putting in a lower low, right? We're going to break here. So unless you just wick into it and then reclaim 78 or above, then now we have a break here. So locally we have a break. And if locally we have a break, well, the only way that I'd be looking to entertain longs at that point is if we break, if we start breaking structure and we do something like this, right? We need to find the key pivot point. Like you break this low, we need to find a key pivot. I would be looking, like if that was the case, I'd be looking maybe towards 68.5. We know that we have a huge 6-hour order block sitting right at 68.5. We broke up from this on the higher time frames, never ever came back. Never ever came back for this. So yeah, you just have to determine how you're going to go about it, but you got to see things in the structure, man. Fibs make a great TP in my opinion. I think anything other than just guessing yourself makes for a great TP. Personally, I like pulling a measuring tool for 0.5%. I typically will take 0.5 or 1/4% or quarter of my trade out at 0.5%. That way I'm ensuring paying the fees. I've ensured that I've paid myself a little bit of money. I've set my stop to my entry. If it comes back, it comes back and wicks me out. And I walked away with a $5 Wendy's meal in my pocket. You know what I mean? Like at least I walked away with something. I ensured that it was at least a winning trade. So however you want to do it, however you want to do it. Oftentimes, like if we're going to play in between 72.5 to 71.5, then that's my zone. If we're going to break down here and we're going to start closing below 72.5 and we see a retracement back into 72.5 as a rejection, well then, which technically speaking has kind of already happened. It's kind of already happened. There's barely, this is such a poor low too. And I anticipate that we're going to head lower. That would have been my entry right there. Your close, your back test, your dump. And then I would be targeting down here with my TPs along the way. All right. And it's probably a poor example, might be a poor example, but you guys get my point. Like if you're going to play in between two ranges, then this is a zone that you should focus on. Yes, is it possible we can clean this up and then do something like this? Absolutely. Those are all things that can happen in trading. But again, if you're going to break down from here, then I suspect you get a back test and then dump. If you don't get a back test and you get shoved down like this, I'm immediately looking for longs to ride this back up for a rejection. This has now been mitigated. If this now dumps and this has been mitigated, by the time we come back up, it's going to push right through that. The reason why I say that it's been mitigated is because people had limit orders. Like you're not going to see that on XO charts and all the rest of that kind of stuff. It doesn't measure for limit orders. But when you see inefficiencies in here, there's probably limits in here that need to be filled. If you're going to break down from a range, where would you suspect that limits would be put in? Well, I suspect that they'd probably be put in on a confirmation that we're actually breaking down from here. I suspect that limits are probably going in after breaking the range low. And that confirms as we dump lower. Same thing here, guys. If you're going to deviate like close and you finally get a bounce, but you closed under, but then you closed above, where would you suspect that limit orders are going to be replaced? I would suspect that they're going to be placed right at the range high. And in that case, that's exactly what happened. People are looking for confirmations. This is where I'd be putting my limit orders. If you're going to do something like this, deviate and then close above, yeah, I suspect a back test. I suspect that this needs to hold. And this is where I'm going to put my limit orders here and here. If I was to take a measuring tool right now, like I'd be looking for at least 0.5%. I'd be looking for at least 0.5%. I'm not even interested in that. 95% of traders lose money. We all lose money, man. 100% of traders lose money. What are you talking about? 95, maybe 95% of traders are just unsuccessful because they don't have proper risk management. I get your point. I'm somewhat being sarcastic. Yes. WP course is great for market structure, but honestly, the more you attend these live streams, the more you'll know that you won't need you won't need market cipher. Market cipher is just a preference. Market cipher gives you a visual, man. It's like any other indicator. If you can utilize it in a proper way, it can be very advantageous. But do you necessarily need it to trade? No, you don't.
No.
For me, it's something that I've had for many, 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 many years. I've tried order flow. I've tried EXO. I love the TPOs. I understand all that crap, but at the end of the day, the more things that I had on my screen to look at, the more complicated things got. I'm a pretty simple guy. Just give me a simple approach.
Yep.
There's a KISS, right? You guys all know what KISS means? What does KISS mean? You guys tell me in chat. What does KISS mean? Keep it super simple. Yeah, keep it super simple. Keep it simple, stupid. Right? Yeah, keep it simple, stupid. You guys don't have to complicate the crap out of everything. You don't. VWAP snapped. We are so far away from VWAP 2. I'm like, man, we are so far away from VWAP at 74K. So VWAP snapped. Another thing that is interesting about VWAP is where it snapped from. You guys see where it snapped from? Snapped right at 71.4, 71.5. Could we see something like this? Yes. Is there volume in here? Yes. Does it pick up in here? Yeah. Is it thin through here? Yes. You have to ask yourself all those questions. Like we can go down to the lower time frames. We can actually look at volume here. Volume will always be king, guys. Volume will always be king. Oof, that was horrible. I didn't want to do that. Look how volume thins, right? Like you got a couple places in here along the way, but look how volume really starts to thin through here before it picks back up right around the previous range high. If I was to pull this back a little bit more, and I'll take from this pivot, this is an even better example. Volume really starts to thin through here before it picks up. Where? Well, you got your point of control. It's sitting right there, right at the range high. I suspect that we probably don't touch 71.5-ish again because it was mitigated on the way up. I suspect that if anything, you're probably going to deviate a little bit and come down to like 71.4 or lower. But it doesn't really matter, guys. The point is like this is the area you should be looking for first. It's what usually comes first. And who knows? I mean, we can tell in the volume profile that we do have a little bit of things along the way. But if that's the case, let's just say that we do get a bounce somewhere in between here that we're not really paying attention to where volume thins out. Are you going to be mad and upset that we actually bounce from here? No, of course not. You're not going to be mad and you're not going to be upset. You're going to be like, okay, that landed in the middle of nowhere. I have nothing there marked out. What do I have marked out? What do I have marked out? I have 72.5 marked out. So what happens at 72.5 if we kind of come down here, we break this for another lower low, and then we finally get our bounce, and we come up and we do something like this. And now we break this high. We're going to look for retracements, and we're going to see if 72.5 holds before we do anything. That's what we're going to do, because that's what makes the most sense. This doesn't make any sense. I can't stand crap like this. It's very rare that I even take trades in the middle of nowhere. If it's not at a key level, then you patiently wait for it to be at a key level. Keep it simple, stupid. Yeah. I learned that in engineering. Yeah, for sure. Hella informative, Thor. Can you guys? Yeah, I already saw that one. What if you don't have market cipher? Well, you can go into indicators and look for a free version of market cipher if you so choose to do so.
Yep.
Me and Casper love market cipher. I can't say that I love it. I will say this about market cipher, guys. It's an oscillator, like I said earlier. If you don't know how to utilize it properly, it's not going to be as beneficial as you think. If your technical analysis is on point, it is beneficial. It can help. You don't necessarily need it so long as you even have a basic understanding of market structure. But for me, the visual is quite nice. Like, it's an added confirmation, and I can pull it up really quick. I can look at it and I can go, okay, this is what I see. And you guys will see too, like with my market cipher, I don't have green dots all over the place. I don't like, this is basic. This is basic market cipher. All it is, it's just showing like where the juice is, where the juice isn't, and momentum. That's it. I just use it as a very simple oscillator. Like a lot of like the other things are closed out, right? Like I don't have RSI, I don't have the stochastics, I don't have all that stuff. Okay. Basic. I don't need a green dot to tell me that we're below the 60. Okay. I don't. It's just like, again, we're going back to keep it simple, stupid.
Yep.
Which VWAP are you using? It's pretty basic, man. I'm just using the Market Cipher SR version of VWAP, which is suitable. It's up here. VWAP, Market Cipher SR. That's it. I will use anchored VWAPs every now and then. I find that anchored VWAPs are quite nice to have every now and then. I also use trend-based Fibonacci's. Trend-based Fibonacci's can be very, very useful at times. I'll use a whole host of things, but at the end of the day, I try to keep it very like simple. Market structure, market cipher. That's about it. And having proper TA. Like right now, you're having a hard time closing outside. You see that we closed on the 2 hour right on the range low. And right now we're having a hard time closing below that.
No.
That's why you need to shift through like some of these time frames. We'll see what happens with the 2 hour. You got about an hour left here. That's it for me, dude. You got anything to add?
No.
Do you guys have anything to add? Is there anything that I missed? Can you guys tell me if there's anything that I missed? Or do you guys have any more questions? Long or short?
Yes.
Yes. That's the
Alright,
perfect answer. Yes.
perfect. Alright, I'm gonna go get this video uploaded for you guys. Um, yeah, it should be done within the hour or in the half hour.
Okay, cool.
Alright.
I will see you guys for New York Open in the morning.
Alright, guys, y'all have a great night. God bless and be easy.